Okay, I'll talk about growth already. Yeah. Okay, so again, what is my growth strategy? This is for standby. Okay, let's go back to this chart. So whatever I do is actually related. Okay, go back to this chart. Okay, income. So today I'll put 50% of my money in income. So if I have enough, I'll go into all three. If not, I'll just go to the REITs. So this one is for standby. That means I will take the 30% buy if there's a very good opportunity that present itself. So do we have a very good opportunity that present itself? Okay, thanks to Eric. He actually suggested me to look at this counter. Okay, Samudera. Okay, it's a shipping company. So like I said, now you need a very compelling reason to look at growth stock now. So the question here is this a good enough compelling reason? So this was sent to me by Eric, one of our members. So Eric, thank you so much. So global shipping rates set to jump as carriers avoid the Red Sea amid the attack. So unfortunately, now we have the Palestine versus Israel. Okay, of course, we're not going to discuss that. But because of that, I think there were some attacks in the Red Sea. And yeah, one thing leads to the other. And because of that, the carriers avoid and the shipping rate actually went up. So the question here is this a compelling reason, okay, to look at this particular stock called Samudera? Okay, again, I hope I want to help you to link back. So I think now is not the best time to look at growth stock because growth stock, the best time to look at is when there's going to be a bull run. So to me is that I think there is a pullback already. This bull already run up to 75%. Wow, the risk very high. So this is not the best time. If you tell me that down here, this is the best time to actually look at the growth stocks, then can run. Okay. So the only reason for me to look at growth stock now is when there is a very compelling story. So now the question here is this Samudera, is it a very compelling story? Is it a very compelling story? So shipping has gone up. So let's look at what Samudera does first. Is in transportation of containerized and non-containerized cargo through its container shipping and bulk tanker business segment. So they basically own ships, and they just help to carry the containers. They are connecting various ports in Southeast Asia, Indian subcon, Far East, and the Middle East. So I believe, if I'm not wrong, that means Red Sea area is also in their coverage. Please correct me wrong. Anyone from shipping, please let me know. Based on this, I believe they also cover the Red Sea routes, which also means that if the rates go up, they will also get the better rates. Please correct me if I'm wrong. I'm definitely not in shipping. So more info about their business. So it's a feeder service between its hub in Singapore and the spoke in Asia, in inter-regional container shipping service to manufacturer, exporter, and importer. Okay, so they can, again, same thing. Basically, this is a coverage, Southeast Asia, Indo China, Far East, Indian Con, and Middle East. So they actually help to ship the container. So the other part of the business, right, they just charter out their boats. Okay, that means they sort of like rent out their boats. So this is what I understand from these statements here. So either they help people to ship the cargo or they actually rent out their vessels. So that's their business. And you can see that the stock price is super correlated to the freight rates. So this is the freight rates. over the years, you can see during the COVID period, there was a sharp increase. That's where we caught Samudera the first time. There was a sharp increase 2020 to 2022 for the freight rates. That means the shipping rate, okay, cost for transporting the container. And you can see same thing. The price also actually shoot up. Okay, the price actually shoot up. Just for comparison, the freight was quite steady most of the time before 2020. So same before 2020, the price was, quite steady most of the time. Then when the freight rate go up, then this prices go up. So what I'm trying to argue is basically this stock is highly dependent on freight rates. Okay, someone already caught attention to this counter. Samudera shipping stock rise on the back of higher global freight rates. So market insiders see rates remaining elevated as long as the attack in the Red Sea continue, putting the squeeze on the global supply chain. So basically, the question here is this, where is the freight rate going to go? If the freight rate, if the war continues, the freight rate will go up. If the war stops, then of course the freight rate will come down. So where is the freight rate going to go? So that is the question. As per what this article says, so as long as the war continues, the freight rate will be high. If the freight rate will be high, then of course, very likely Samudera, okay, they will enjoy higher freight rate and the price will go up. Okay, can follow my storyline. If you need me to repeat, just let me know. Just give me a shout out. I will repeat. Okay, so then of course the next question here is this: is the conflict going to end soon? Based on this article, the answer is no. The Red Sea crisis unlikely to end soon. But whether is it going to be 1 month, 3 months, 5 months, nobody knew. He actually mentioned that, okay, this article is 31st Jan. Political deal and mission to project freight vessels might bring a resolution within 6 months. So I think what this guy is saying, so probably within 6 months, there will be resolution to the conflict. So there will be, this high freight rate probably can last for another 6 months. Okay, this is what this guy is saying. If you actually look at their numbers, okay, can you see? Okay, just focus on this one, the group. Okay, hope it's not too small. You can see that their profits has dropped quite what do you call that? Significantly. So O2, okay, we look at here. In 2022, the profit was 323 million. Now they're talking about 100 over million. So the profit has actually dropped quite significantly. But at the same time, the price of the stock also has dropped. Okay, you can see, okay, maybe I just use the Finance Yahoo, it's easier to see. Okay, what I'm saying here is this. Yeah, the income of the company dropped from 300 over million to 100 over million but at the same time, the price also dropped already. Can you see? So it doesn't mean that, the income drop, then this stock is lousy. So the price has already quite reflective. Also dropped by half already. Okay. So the question here is this, even though the income dropped, the price has also dropped. So is this a good price to enter? Is this a good price to enter? Then we of course leave it to the pricing analysis. Okay, again, I need your help here. Does this company pass the 6 tests? Yes or no? Thank you so much. 6 tests all pass. Okay, great. Thank you so much. So, no problem. Business. Okay. Business wise, yep, freight rates depend on your thoughts. Okay, let's look at the pricing. Okay, number one, you can see that, okay, just based on the general valuation, well, the price is quite interesting. The PE ratio is only 1.31. 1.31 price to book. So for ships, because they have hard asset ships, so we also can look at price to book 0.53 is also quite undervalued. Okay. It's also quite undervalued. So in that case, I also did the DCF. Okay, let me just show you the discounted cash flow. Okay, again, I will send all this discounted cash flow to you. Okay, I already do super kiasu already. What do you call that? What's the term? Okay, super cautious. Conservative. Thank you so much. Suddenly slip my mind. Thanks. Bad signs of aging. Super conservative already. So, like for example, the net profit margin, all those very high one, I didn't take. 24, 20, 32, I didn't take it. Okay. I just use 17, 2, and 1 to calculate my average profit margin. Again, I'm assuming there is zero revenue growth. And down here, right, okay, their last revenue is about 582 million. I actually only put 400 million. So even with all these conservative numbers, right, okay, I still can get fair value. Okay, this is in US dollar. This is in US dollar. This is SGD. Fair value about $2.59. $2.59. And currently the price is trading at 73 cents. Okay. So it's a question of risk and reward. Risk and reward. A few things to consider here. So number one, do you think that the conflict in Red Sea is going to continue? Okay, if you think so, then it's quite straightforward already, because if you think so, right, then the freight rate is go up. Okay, based on history, the freight rate go up, the price will go up. Quite straightforward. Okay. The thing is, if you think that it's don't know, then we look at the pricing. So my point here is this: we don't know whether the freight rate will go up or not. But my point is, even if let's say don't go up, now it's already trading at very undervalued. So it may be worthwhile to take the risk. That is what I'm trying to get at. But of course, I won't be holding this stock for long term. So I just buy in. If it actually went up, then I quickly sell already. Okay, because once the freight rate come down, right, as you can see from the chart, the price will come back down. So the correlation is very strong. Once the freight rate come down, the price will also come down. Okay, basically, the question is, do you actually want to take a bet for the freight rate to go up? Okay, so my point is, it may be worthwhile to take a risk. Why? Because now it's still severely undervalued. So even if it doesn't go up, you're not buying something very expensive. That's what I'm trying to say here. Okay, but of course, to which is own. I'm just going to give some guideline of how you can measure between risk and reward. Okay, if you think that no market is going to correct, no point taking a risk. Yeah, you may be more correct. Yeah. Okay, thank you so much. Johnson actually gave a TA perspective, trading above moving average 200 days looks attractive. Okay, thank you so much. So many ways to slice the cake or the cat. So this is how I see it.